Most of the big international organisations prepare long-term energy forecasts. We like BP's in particular because it comes out first every year, around about February, and also it perfectly reads across to their statistical overview. And what they generally project is that global population by about 2040 will be about 9 billion people. What you have, though, in the next 20 years is a difference in energy compared to the last 50 years. Despite this huge increase in population going ahead, the demand for energy will not increase the same as it has in the past. So you have energy efficiency, you have drivers of climate change among others, and you also have electric vehicles and improvements in technology. Gas is going to increase at about 2% per annum. And LNG going forward is going to increase at about 4% per annum. So that's 3 times as much as energy in totality around the world. There's only one other element of the global energy space which is challenging LNG for growth going forward, and that's Africa itself, which is also a demand centre. So what you see in the next decade is probably an increase of about 5% per annum in demand. The key development of Henry Hub and the American shale breakthrough is that LNG can now go anywhere in the world. In the second catchy catchphrase, you now have the Blue Sky Defence Action Plan. This was extended to 28 cities in coastal China, now covers 37% of China's population, which is 513 million people. So 513 million people are now subject to air quality restrictions. Chinese LNG demand last year was 55 million tonnes. If that doubles over the next 2 years to 110 million tonnes, which is very possible because the storage is under construction, is that Mozambique is producing its LNG absolutely at the right time, in the right place to supply China. The first point is that oil and gas investment is very, very long term. It is not a quarter by quarter thing, it's over a number of decades. Essentially the way it works is the company, we'll call them a concession, gets a period of time to explore for oil or gas and to find out whether there is oil or gas. Be under no illusions, the country does not own the resources for the period of the concession. But what I will talk about is the 5th licensing round. This is a real slow burner, and it's a case of watch this space. That licensing round was tendered 2015, it was awarded last year and signed last year. The first wells will be drilled next year. Those exploration wells are significantly nearer to South Africa than the Rovuma Basin. To give you an example, the Zambezi Basin is only 600 kilometres away from Sasol's pipeline in Mozambique. If gas is found there, then the game changes in South Africa without a shadow of a doubt. If the country does not have a gas constraint, and Mozambique does not have a gas constraint, it essentially has infinite gas for a lifetime. LNG is what I call a Noah's Ark job. Trains, that's the production processes of LNG, are always built in tubes. So once you build the initial infrastructure for LNG, if you have an unlimited gas, you will build more trains. At the end of the concession, if there is not a renegotiation, the gas goes back to the state. So what this means is that the guys will get the gas out of the ground, because otherwise they don't make money. In addition, the person who negotiated the decree law for Mozambique put a very smart clause in there. And the clause says, if within 10 years of the start of the commercial assessment period, you have not proposed a development plan for the entire block, the gas goes back to the state. The world has changed because of the American shale gas revolution. LNG can now go anywhere in the world, and America sets the market clearing price. Just to put it in perspective, the Qataris took 35 years to go from the discovery of their gas to the first LNG. Mozambique in totality will go for 11 years. Anadarko have had a great 12 months. They've announced that FID will be on the 18th of June next month. Essentially, the Mozambican cabinet approved their deal. The marine concessions, which is the ship going in and out of ports, that has all been structured. As I mentioned, Anadarko is a traditional deal, so they're selling their LNG to end customers. Pretty much all of these are now public in terms of names. And then last of all is financing, which we're involved in at the moment. So what's happened in the world of global M&A is that Chevron originally made an offer to buy Anadarko, and Occidental had wanted Anadarko for some time. They phoned a friend, Warren Buffett, the world's richest man. He gave them $10 billion over a weekend, And then Occidental have now agreed to sell the African assets of Anadarko, which include Mozambique LNG, to Total last weekend. Just to put this in perspective, and again, it's an important reality check of where Africa sits in the world. The value that Total are paying for the African assets of Anadarko is $8.8 billion. $8.8 billion is only 23% of the market capitalization of Anadarko at the takeover price. So that means 77% of the value of Anadarko is really all about America. And it just so happens that one of the assets I'm talking about is Mozambique. What is very exciting about the Mozambican one is it's the third time in the history of LNG that you have enormous projects being built at the same time. In global LNG to date, the only mega trains that have been built, these are trains which are roughly speaking 25% larger than the largest conventional trains, have been built in Qatar. ExxonMobil is now building, or will be building, the world's first mega trains outside the state of Qatar. When Mozambique LNG takes FID next month, it'll be the largest project in the history of the continent, and that record will last for only 3 months. And then Rovuma LNG will become the largest project in the history of the African continent. What's really important about Mozambique is the timing, and I'm going to go back again to the Chinese example. You have the largest market on planet Earth in the future, changing its energy policy. A country that is not the US, does not have any trade war implications, is in the perfect place to supply Chinese demand going forward. So what we have argued in the study as Standard Bank is that going forward, Mozambique can become to China for LNG as Australia is for minerals and New Zealand for food. That is one of the primary suppliers of a commodity that China absolutely needs for the next 100 years and beyond. And the important point here is what we're arguing is not just that Mozambique should supply a commodity, but also in the same way that Australia has, or the same way that New Zealand has, it should set up entire industrial value chains that employ thousands of Mozambicans and develop Mozambican capital to supply that underlying need. The total we have at the moment is $128 billion of investment by 2025. Expressed another way around, that's over $1 billion a month of investment being made in Mozambican LNG and associated projects between the Coral FID in 2017 and 2025. I'm pretty sure that most of the people who have been mentioned at the Zondo Commission, even they couldn't spend $1 billion. But Mozambique LNG is looking to spend it. South Africa can get a good LNG price if it chooses to do so. There's 2 key reasons for this. The first one is shipping distances. So in shipping terms, Mozambique is essentially down the road from South Africa. It's 3 days sailing distance. The vast majority of the global LNG market has their winter when South Africa has its summer. By definition, South Africa can get an outrageously cheap gas price and buy the gas in its winter when everybody else doesn't need the gas and it's their summer. This single fact, seasonality, has been tragically ignored by policymakers in my view. One of the huge developments that's happening now in global LNG is LNG trucking. Really taken off in China, one of the big sources of LNG demand. LNG trucking is again a natural for Africa subject to roads. Mozambique should have $65 billion of FID decisions by the third quarter of this year. This is in a country with a $14 billion GDP with 100% debt to GDP ratio. It's an incredible achievement. So the next question is really, what are the opportunities? Essentially, every single industry in Mozambique is going to change as a result of these projects. Every single industry. So to give you 2 examples, the one, you have 40,000 guys working at the site building the LNG projects. If you have a Boeing 737 or an Airbus A320 that every weekend is taking the workers who are off shift to Zanzibar or Durban or Cape Town or Vic Falls, whatever, you are only transporting 0.45% of the workforce for a weekend away. You know, the scale of LNG is really that large. So essentially you have every single sector of the economy will benefit, especially agriculture, especially consumer expenditure. President Nyusi was in Beijing the other week for conversations with President Xi. The LNG is entirely complementary with BRI, but BRI is on a kind of a different tangent, because that's where China can lead particular industries and developments. In the LNG case, China is 20% of one of the blocks, Area 4, and 0% of another. Its largest role is likely to be customer, because in the very high end of oil and gas, China has limited experience. You're talking about the last 10, 12 years of involvement in oil and gas. They simply are not able to do the technical and project management expertise that the likes of an ExxonMobil can do. There is a great picture in our Exxon study of what the site will look like with multiple trains over time. So that's very much the sales pitch, which is this is the opportunity for South Africa. You essentially have to stick your hand up to take some of $128 billion over the next 8 years. It's not 128 because a lot of that is international, but probably at least as a guess, it's going to be 30 plus. Going back almost 20 years now, all of the financiers in the world have been subject to something called the Equator Principles, which are part of World Bank environmental standards, and essentially any one of the financiers is forbidden to lend to any one of these projects if they breach any single one of those principles. So just to give you a couple of examples of some of the ESP stuff under consideration, it's public domain in our Exxon report that Exxon is going to be supplying LPG for cooking purposes to all of the immediate communities around Cabo Delgado, including teaching households how to use LPG over a sustained period of time, as opposed to charcoal or other traditional alternatives.
It's like taking Modupi and Kusile, these giant power stations that Eskom is building, and doing 2.5 more of those. That's just to give you some perspective. This is really big numbers.
As you know, power capacity and supply has to precede the increases in demand, otherwise you end up with a situation such as we're ending up here. The ECIC question on the gas curse, you may have arrived late, but if not, there still hasn't been a gas curse today. I've got to touch wood. I think the reason for it is the nature of LNG, where it is the only resource or commodity where you must beneficiate at the point of extraction. Everything else you don't have to, LNG you absolutely do. And the corollary of that is you have a sheer massive investment to be made. Essentially the underlying deal is simple. It's a well that goes into a big freezer, albeit it's a freezer that's 500 metres long, 60 metres wide, 50 metres high. But it's huge and it's expensive. And the consequence of it being huge and expensive, and it's really linking a little bit to the environmental question earlier, is that the bankability, the legal structure and the governance around those investments has to be absolutely perfect. So what Mozambique is at the moment is a signatory to the EITI. You haven't had any scandals with the likes of Vale in terms of payments to the government. And the challenge I would make to the DFIs and the NGOs of the world is absolutely to hold the country to account as it grows and develops over the next decade. What I do know is that natural gas around the world is 50% less emissions than CO2, so net it's absolutely positive for the planet. We can of course maximise renewables in the jurisdictions that can maximise renewables, offshore wind in UK, Denmark, PV in South Africa or Chile, but you still have the economic development problem and challenge for when the sun goes down or the wind doesn't blow, as Rod eloquently mentioned it.
I'd like to thank again our sponsors, FTI Consulting, and we'd also like to thank Standard Bank.